Tom Lee over at Fundstrat said this today. Post FOMC press conference at 2:30 p.m. on Wednesday, equities have rallied 5 days of the last 5 of 6 instances. Small cap remains most compelling. As we near the start of August, it is worth bearing in mind the base case for August is flat to down for the S&P 500. In 2024, the context could be fueled by a rotation into small caps, aka the summer of small caps, or large cap earnings disappointments. Now, take a listen to this clip on CNBC from Ryan Detrick, someone we cite often here on this channel over on X. He says, still no major cracks in overall bull market thesis.
This is a potential week of a week of potential lot of catalysts out there. Ryan, what exactly is going to stand out to you about what ticks the market either higher or lower from these current levels?
Yeah, Dom, thank you for having me. Good morning, everybody. So I think what's fascinating about this month specifically so far, Dom, the first half of July is usually really strong. Check that off. The third week of July is usually weak. Check that off. Now here we are at the end of July, which is usually pretty strong. But I want to touch on one thing you mentioned at the top of the show. You said last week was mixed overall, and it was if you just looked at the headlines. But Dom, last week, 437 stocks on the S&P were higher last week, right? Even though it lost about 1%. Why is that? Well, we all know, right? The large cap tech and communications have been pulling things back. I think this overall, I know a lot of guests have said it, including me, this overall rotation is really a positive thing. We are seeing a lot of groups that are doing well. Look at small cap technology. That's doing just fine, right? So I think that's what stands out to us. And there's a lot of news this week. Like we can get into some of that stuff, but just the underlining pinnings, Dom, of this bull market, we've been bullish for a while. I've not seen any major cracks. And we think, one more thing on this, August usually is not that great of a month. Look at election years. And election years are pretty strong. So I'm not so sure this rally that started in May, Dom, is quite over yet. Might have a little bit of juice left to it. Then the normal August volatility out of an election is probably likely.
But you brought up the point. It is maybe call it 5 to the magnificent 7, maybe 10 stocks overall in the market that really determine the direction. And many of those names are going to report their results this week. What we saw last week was that, these big tech names maybe don't have enough in the tank to power the market higher. We saw what happened with Alphabet. We saw what happened with Tesla. Yep. Can we expect the same with the other ones this week?
Yeah, wouldn't be surprised. I mean, the bar is set extremely high for those names, and they've had so much spectacular earnings overall and justified. But I don't think that's a bad thing, right? I mean, for the longest time, everyone complained only 7 stocks going up. It was never only 7 stocks. Lots of other stocks were going up. They were just going up more. And now people are like, oh, my big cap tech's not doing quite as well. But again, that doesn't mean you have to be wildly overweight large cap tech. You can look at some other areas. Again, I mean, I love the example of 3M last week, right? I know you talked about on the network, but up 20%. 3M is selling things, right? It's not just about AI all the time. There are some major positive things taking place here. And that's why I think you mentioned this week what we're looking at. Sure, we're watching the big tech names, but just what's happening overall with other consumer companies and industrials and financials. One thing, Dom, I don't think anyone's talking about this. Regional banks are up 20% this month. I mean, I just don't think that's Mr. Market's way of saying there's this big, monster under the bed when you see that much strength out of a group like regional banks. I think that's a pretty darn good sign.
How much of that, Ryan, and not just some of the blue chip names like 3M, which to a lesser degree is indicative, but of that small cap and even regional bank trade that you were talking about, is due to just this idea that there have been so many bets against them right now that people are rushing in to close out those short positions, and that there's not enough of this momentum to keep things going to the upside, fundamentally speaking.
No, that's a great point. I mean, clearly we got lopsided, right? 4 weeks ago, nobody wanted to own small caps. Now we've seen the run they've had. We've been overweight small caps most of this year, small and mid caps for that matter, because we thought inflation was going to get better. We thought we start to see some rate cuts, and we think that's likely. We think 3 to maybe even 4 rate cuts is possible this year. But you mentioned, can this rally continue? But when you look at small caps relative to large caps on a valuation basis, it is historically cheap, just to keep it simple. And then now with this bounce, could it keep going? Listen, we think it can, Dom. We had a over 11% bounce on the Russell 2 those first 5 days this rally started after that CPI a few weeks ago. What in the world does that mean? I looked. When you have at least a 10% bounce in 5 days, that's a buying thrust, an incredible pressure of buying. Historically, going out a year, you're up like almost 90% of the time higher 27% on average. We can get into more stats and things, but to keep it like this, I think that beach ball is way under the water. You let go of it, it starts to get a lot of momentum. I think that's what's happening to small and mid cap. So we absolutely think the second half of this year, they're still going to lead the overall market, even though they've had a historic run the last few weeks.
I don't know about you guys, but that was pretty powerful. Now, I think it is worth mentioning that small caps were having a pretty good day today. They were almost hitting a new high of this cycle, and then things just totally flipped. Small caps are now the underperformer by a large margin, down 1.3% at the time of recording this video. At the same time, the S&P is up 0.1%. And I think there can be two things that are going on here. As I mentioned in the last video, with the Fed coming on Wednesday, the markets are pricing in a 100% probability of a cut by September. If the Fed takes this nauseously neutral standpoint, as they typically do, they say they're going to remain data dependent, blah, blah, blah. If the markets are pricing in a 100% chance of a cut in September, anything short of the Fed explicitly saying we're going to cut rates in September in the short term will be negative for small caps. And you are seeing mega caps that are outperforming today. Apple's up 0.2%, Meta's up 0.5%, Amazon's up almost 0.5%, Google is up 1.5%, Microsoft is up 0.5%, and these numbers did look much better about an hour, 2 hours ago, but still there is this outperformance of mega cap tech today. Maybe some hedge funds and institutions that have recently started to take that trade of short Mag 6 or Mag 7, if you will, go long small caps. Maybe there's some reversion of that happening as we head into the Fed meeting. Which personally, given the rally we have seen in the Russell 2000, that's probably the best thing we could see at this point. You don't really want to see small caps that just soar higher into the Fed meeting, because that creates unrealistic expectations, much to the same degree as I was pretty bearish, I guess, heading into big tech earnings last week, 2 weeks ago. And what happened? You've seen the NASDAQ sell off 8%. Because expectations were too high. These stocks had rallied anywhere from 25 to 80% following last quarter earnings. And I'm talking Super 6 or Mag 7, whatever terminology you want to use. They've since reset quite a bit. And you did get an 8% pullback in the NASDAQ. I think something similar is happening here for small caps. Expectations got too high. Now you're seeing a little bit of a reset. And that's overall healthy. Tom Lee also shared this post on his X account from Tom Block that says, Monday Fundstrat's note focuses on Wednesday's important FOMC meeting with a statement at 2 p.m. and chair's presser at 2:30 will signal of September cut be sent. Political world awaits for Harris VP pick. And again, Tom Lee is just kind of reiterating what I'm saying. The most important thing for this week, especially for Wednesday and the second half of this week, is do we get that signal of a September cut or not? If we do, bullish for small caps. Maybe not as bullish for mega cap tech. If we do not get that explicit signal sent, then bullish for mega cap tech, bullish maybe for the S&P and the NASDAQ overall. Perhaps you could see more rotation back into those large caps, which could push the indexes higher. And that's really the most clean-cut way to look at this week. Now, with that said, we did get some data today. Little encouraging, a little not encouraging. RenMax Renaissance Macro Research posted on X, which Tom Lee also shared. It says firms upbeat on the outlook. Current conditions in Texas manufacturing outlook survey worsened to negative 17.5. However, 6-month expectations advanced to positive 21.6, the highest since November of 2021. So forward expectations over the next 6 months got better, but current conditions came in worse than expected, which is something you normally don't see. You normally don't see this wide disparity between what's going on now and future, projections for the manufacturing sector. Now, some of this is probably due to the Fed that is about to start lowering rates, which could kick up a lot more manufacturing and investment into this important sector. And as I have mentioned in other videos, you do have earnings as well this week, although I think earnings are much better priced in alignment with what we're going to get. Meaning, again, when we started off this earnings season really last week, you were priced for almost perfection from big tech. I think big tech is priced now for inline earnings. If we get really good earnings, which I don't think is likely, then these stocks can advance higher. But again, I don't think that's likely. If we get inline earnings, which I think is most likely, I'm not expecting much of anything. Just up or down, maybe 2 to 3% across the board, which probably is not going to have a huge impact on our markets, considering we have the Fed and non-farm payrolls and the unemployment rate report coming out on Friday. But if you get bad earnings, which is a possibility, then you could get a steeper downside move in markets. Now, you do have a couple earnings today in after hours. Latest Semiconductors, that's about an $8 billion company. Probably not going to be too important. We've already got a lot of semiconductor earnings out the way, but that is one notable one, as well as F5 that does report today in after hours. But tomorrow morning, you have SoFi, PayPal, Pfizer, BP, P&G, Corning, Merck, Enterprise Products Partners, and JetBlue. And then Tuesday in after hours, tomorrow in after hours, you have AMD, Microsoft, Starbucks, Arista, Pinterest, First Solar, Caesars, Lemonade, Electric Arts, and GeneX. Which Microsoft could be an interesting one, given some of the issues you had with that CrowdStrike update. How much did that affect Microsoft? We'll see. There were talks that could even affect the US GDP. We just really don't know what kind of effects that is going to have on Microsoft. If Microsoft was having already not such a great quarter and then that happened, that could make things even worse. Or if they were having a good quarter and that happened, maybe it's not as bad as we expect. We just really don't know. And I think Wall Street's going to pay specific attention to Microsoft earnings this earnings season. A company like Arista has done very well, has went from like $89 per share in 2022 up over $300 now. They make a lot of the cords and hardware to enable some of your data centers. So I think that one could also be important. Wednesday, you have Meta, ARM, Qualcomm, Lam Research, among others. I think the Fed's going to take full precedence coming Wednesday, and even on Thursday when you get Amazon, Apple, Intel, Coinbase, DraftKings, Roku, Block, and Mercado Libre, as well as Booking Holdings. I think from really Wednesday throughout the rest of the week, at least until Friday, it's all about Fed Jerome Powell. Now, Friday, you have the unemployment report and the non-farm payrolls report. So that will give you a separate move as well. But really, there's a lot of expectations around the Fed this week. There's also a lot of investors watching the yield curve uninversion that has been happening recently. You've went from about 50 basis points inverted back in June, around June 18th or so. Fast forward 5 weeks later, you're only inverted 16 basis points. You have seen this uninversion really ramp up over the last couple of weeks. And yes, historically, this does lead to pain in markets. But again, the precedence is the yield curve uninverts when the Fed is getting ready to lower rates. The markets are currently assigning a 100% chance of a cut coming September, with actually an 11.5% chance of a 50 basis point cut coming in September. So from that standpoint, you're uninverting on the yield curve, the 10 and the 2 year, because the Fed is about to start lowering rates. Not necessarily because we're heading into a recession or there's some kind of, crash coming. That's not exactly why we're uninverting. And some people are going to say, oh, we're uninverting. That means a crash is coming. It doesn't, unfortunately, for the bears. And also, I will point out what's very notable about this underperformance, the severe underperformance today of the Russell 2000, down about 1.5% at the time of recording this video, compared to the S&P that's pretty much flat today, is 10-year Treasury yields are actually down about 2.5 basis points, which normally when you see 10-year Treasury yields down at all on any given day, tends to be positive for small caps, not cause a 1.5% down day. If we take a look at CNN's fear and greed indicator, today you're at 47, which is pretty much right on neutral. Yesterday you were at 45, or Friday you were at 45, which was neutral as well. So today is a little bit more bullish than you've seen Friday, which I find interesting because small caps are not doing as well today. And if you take a look at the percent of stocks currently trading above their 50-day moving average, you're at 66.7%. You actually have almost 3% of all stocks falling below their 50-day moving average today. So not a terrible day, but a bad day nonetheless. Not a good day. The latest AI investor sentiment survey shows bullish investors at 43.2%, neutral investors at 25.1%, and bearish investors at 31.7%, which is the highest you have seen in the last couple of months. And if we take a look at the short position in the SPY, the ETF that tracks the S&P 500, you've went from 11.5% short interest down to 9.21% short interest. So you're definitely a lot less short than you were before. You've also seen a reduction in the dollar amount that's currently sold short in the SPY by about $12 billion as well. So you have seen a bit of a short squeeze for the SPY. You've also seen this for the NASDAQ as well as the specifically small caps. If you take a look at small caps, you have went from short interest of free flow, says it's unavailable for whatever reason. You have fallen a lot for the short interest in the Russell. You've went from like 33% down to the low 20s. So you've seen quite a squeeze as well in the Russell, but still you're sitting at over 20% short interest of free float for IWM. That could definitely propel this ETF, this index, even higher if you do again get the Fed that really confirms that September cut. And really, again, that's all this comes down to for this week, especially again the second half of the week from Wednesday, Thursday, and I think to a lesser extent Friday. I think the markets are going to react to the unemployment rate and the non-farm payrolls coming on Friday, but the Fed's going to have an impact on our markets really for the next couple of weeks. And then you have Jackson Hole coming in August, and that's going to be another kind of event. If the Fed does not signal a cut September for this Wednesday, then I think Jackson Hole would be the time that the Fed would actually do that. Now, nonetheless, if you look at the technicals for the Russell 2000, I think an important level is going to be around 218 or so. That's where you get a lot of, or you have seen a lot of demand come in during this latest rally. Now, if you do not hold that level, then your next level to watch for on the downside, if the Fed does not again confirm that September cut, would be that 20-day moving average at around 213. I think that's where you come in and find a lot of support, and then around 210 if things do get really bad. And I mean, on a percentage basis, that would be a drop of about 5% from here, from top to potential 210 bottom. That would be a drop of about 7.3%. So that would give back a lot of the gains that we have seen. I don't think that's likely, but it is a possibility we do need to be open for, at least here in the near term. I think that would present a buying opportunity if we do get a 7% drawdown in the Russell 2000. I think if you did not have exposure to the Russell, that would probably be a good point to get some exposure. Now, I'm not a financial advisor. I'm not a financial planner. I just share my thoughts and my perspectives on markets. And if we do get any kind of pullback in the Russell, I will be taking that opportunity personally to add to my positions, because I do believe in what Tom Lee says, that even if this summer's not great or this year's not great for small caps, I do think next year and 2026 are going to be really good for small caps as rates start to fall, especially if the economy avoids a recession and we do get more M&A activity. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys enjoy the rest of your day, and I will see you in the next one.